Welcome back to our channel where we're going to be exploring important financial topics to help you make informed decisions when it comes to your business or a business that you're looking to acquire. In today's video, we're going to be discussing small business financing, the SBA loan. So if you're a business owner like I am, or an aspiring entrepreneur who's thought about buying a business or starting a business, expanding a business, understanding what an SBA loan is and how it works can be a game changer for success. So you don't want to miss out on keeping more of your hard-earned money, so let's dive in. To begin, let's define what an SBA loan actually is. So SBA stands for the Small Business Administration. It's a government agency in the US that supports and empowers small businesses. And they do this by having loans that they will fund with banks. An SBA loan is a loan program. The banks offer it as lending partners, and the SBA partners with them. Its main purpose is to make it affordable, to have affordable financing options for small businesses that might be difficult to obtain otherwise through your traditional banks. SBA loans can be used on a number of different types of deal structures that you are looking into, from buying a building for your business to financing equipment, buying out a business partner, or even buying and taking over a business, equipment, and other things, just to name a few. There's different types of SBA loans. And so understanding the purpose of them is what we're going to explore next. The most common types of SBA loans is the SBA 504. Then there's the SBA 7A loan program, one of my favorites, because it's more of a general purpose financing loan where you can not just buy a building, but you can buy the business, you can have working capital to do things in your business. It'll do debt consolidation. Whereas the 504 program is more when you buy just real estate or equipment. And then there's the micro loan, which the micro loan program is for small scale funding up to $50,000. But these are three of the core programs, and they offer flexible loan amounts and terms and rates. So you should check out different videos that we have that dig more into each of these loan types. My main thing is I don't want you to make the same mistake I did twice, financing things for my business and never looking into SBA loans when I could have kept more of my hard-earned money. So the main two I want to talk about today is the 504 and then the SBA 7A. And I'm going to bring a comparison chart up on the screen for you to show you some of the differences in these two programs. And then we'll dig a little bit further into how to apply for one of these loans and how long it takes to close. So, all right, up on the screen here, we are comparing the 504 to the 7A. So the 504, if you look here, is a loan. You have to have real estate and you have to have equipment for the 504 loan. You're going to need somewhere between 10 to 15% down, sometimes 20%. It has a 10-year prepayment penalty. And what happens is the bank who we find to lend you this money, they lend 50% of the loan. The SBA then comes in and lends 40% and you bring the 10% down. It has a lower fixed rate than comparing it to the 7A program. So let's go over to that side of our chart here. So the 7A program is only a 3-year prepay when you compare it to the 504. And the rates right now are higher because they're based off of prime. Some banks don't use this product to its fullest. Like I said, it is one of my favorite SBA products. It's like the one-stop shop where you can buy real estate, but then you can also add on all these other things like goodwill and equipment, or buying furniture, bringing new employees in. And it just gives you higher leverage for when you're looking for financing. Startups are a little more difficult, and I like to say that, but they're not impossible. And I'll dig in a little bit more into how it could be possible. The last thing I want to mention is that the 7A only goes up to 5 million, whereas the 504 will go over the 5 million mark for how much they're going to be willing to lend. Now let's go into how am I eligible as a business owner? How can I get my business to get one of these loans? The exact requirements for SBA loans can vary depending on which of the programs that you're digging into, but there are some common factors that they're going to look at. They want to make sure that your business is financially stable. They're going to look at your personal credit history, and they want to know that you have the ability, that you and the business will be able to repay this loan. And SBA typically wants to see that you've been in business for at least 2 years, but 3 is like their ideal situation. So if you're buying a business, the business that you're looking to buy would need to provide their financial statements and their tax returns for the last 3 years. Now, like I said, it's not to say that the SBA won't finance a business that's less than 3 years or a startup. The key to doing this is showing that you've been in business in another capacity for a similar length of time, that you're going to be taking that book of business and going and starting your own. It's kind of like when I started my mortgage and loan company. I had been doing loans for 8 years. I had a history of closing loans. I knew every month I was closing at least 15 loans a month. So I took those 15 loans and put it into a business plan and said, look, I've been doing this. I will continue to do this when I open my business. This is what the financials look like. And it would have been easy for me to do that. This is common with, let's say, chiropractors, dentists who are working for someone. They've built a book of business and now they're going off on their own. Now let's dig into the SBA loan application process. And so the SBA application process is definitely a little more involved when it comes to documentation and what they're looking at financially. So it's really important to have your business records and your financial statements in order. Most lenders won't even qualify you for one of these loans without collecting most of the documents that they want up front. So some of the documents that you're going to be asked for and that you'll need to provide are things like 2 to 3 years of tax returns. You're going to need to do a personal financial statement. You're going to need to get 3 years of income statements and balance sheets for your business. They're going to want to know about the building if real estate's involved, how much square footage is your business using, because one of those requirements is that the business is using 51% of that square footage. They're going to want to see your LLC formation documents. They're going to want to see your resume to see your experience, a business plan and a pro forma. And they just want to see what you're going to be doing with the money that you're borrowing and how it's going to help your business. So you might be wondering, why would I want to get all of this documentation to apply for an SBA loan? Well, typically your banks are going to want a lot of this anyway, but there are benefits that the SBA loans have that other loans don't. And the benefits to these SBA loans is a lot of times you can have a lower down payment. I had mentioned 10% down. Imagine buying a commercial building for your business with 10% down. And we've even seen times where you can get a building for 5% down. Even there's a couple out there with 0 down. So it's just fitting into the box of what they're looking for. They want to make it affordable. Now, interest rates on SBA loans are pretty competitive. Depending on the program, it will be based on different indexes. The 7A goes off of prime plus a certain amount of interest that the bank needs to collect on the loan, so they also make money. Down payments, like I said, are lower, 0 to 10% down. If they're requiring 20% down and you're going to a bank, I would recommend checking with a commercial loan broker, or I would also just ask, why am I needing to put 20% down? Sometimes it's how the SBA is going to feel comfortable if you have some dings on your credit or the financials aren't as strong as they need them to be. Another benefit of the SBA loans is the length of the loan or amortization. So most commercial loans are 15 years, 180 months. SBA loans can go up to 25 years. So what that's going to do for you is it's going to make your payment for this loan lower when you're trying to grow your business. If you're like, all right, I'm convinced, I want to apply, what is the application process? And the application process is that you need to find the lender that you're going to want to work with, which a loan broker is who you'd apply with, or you can go directly to your bank if they offer them. I would ask them how often they do these loans. Just be prepared to provide all of that documentation up front that we discussed a little earlier in the video. I want to also make sure I said it's important to maintain your credit score and demonstrate an ability to repay the loan. SBA loans, your personal credit's factored in and it's looked at, but these loans don't go on your personal credit report. They go in the name of the business. They will want to most likely tie the loan to something like your primary residence, or if you have investment properties. And the reason they do this is because they're requiring less down, so they want to have collateral in the event that you default on the loan. And the key to having a good experience with an SBA loan is working with an experienced SBA broker or lender who can assist you navigating this process. How long it takes to close on an SBA loan can vary. It can be anywhere from 60 days to 120 days, depending on how complex your situation is in your business. If you don't have real estate, it can be quicker than that 60-day time frame. So hopefully this has given you a solid understanding of what an SBA loan is, how it works, and they really can be instrumental in helping you grow your small business and helping you keep more of your hard-earned cash. So exploring SBA loans whenever you're trying to do something in your business is really smart, and just trying to understand if you're eligible by seeking professional guidance, which is the key steps to getting one of these SBA loans. So thank you for watching today's video. I have left a link in the description if you'd like to schedule a call with me and my team to talk about SBA loans. And we help business owners every week, every month, and we would love to help you too. Otherwise, make sure you subscribe, hit that bell, because we want to see you in our next video.